Hi, everyone. Hugo, Brock, how are you, buddy? Alexander, Forex Gal, I didn't see where did you find? Oh, on the scheduled interviews. Okay. Hi, Ren, Sinatra. Pretty good. Okay. Hello, Marco. So good turnaround Tuesday, everyone. Short the NASDAQ with 80 pips stop here for just a scalp, not the major high, but at least a scalp. Also, what's interesting to me here is that crude is struggling and it still could be a failing rally here. Okay, I mean, up until last week, crude was making successive new highs every day, along with the S&Ps and NASDAQ, and now the NASDAQ S&Ps are doing it without crude. I think there's a scalp here from the short side. Give today's highs some tolerance. Not sure about the major top, but there could be a scalp there. And the yen is lower. It looks like it's headed lower, and they should support metals if I'm right for a move down to 107. I saw Grega's stuff, and we could pull back and then try 60 again. But anyway, this looks vulnerable to me. Euro schizo. Not sure what to do with it. Almost looked like it's building low right shoulder here. You know, you have to risk the lows here, but perhaps this is ABC for A and then ABC for B ending here. And then we get a C, maybe up to 1930, 1940. Hello, Paul. And the euro is not as weak as cable, but even cable looks like it could still hold in here. I wouldn't be long if we took out 38.20, but you know, there's still a shot for 139.80, 140. Get in front of the dollar. No, I'm going to get behind the dollar. I'm King Dollar, Paul. King Dollar. So this is, you know, we could still drop to 91.40. You know, it's still a possibility we're not going straight to new highs here. And that would probably be supportive of risk. But if the yen is right and the yen is breaking, and it's headed to 108, 107, that's the atmosphere that you should get a pretty good rally in metals. I think gold's heading up towards this 1830 level or so. Silver lagging the way. The key question is if gold gets to these levels, will silver make a new high? Will it take out this high? Maybe we go to 2680. Here's really the picture on silver. I want to talk about it for a minute. Basically, because I saw on CNBC, the Reddit guys are talking about $1,000 silver. Okay, so here's the battleground right here. Look at your daily. So I really think silver has to penetrate $27. So it's trapped right in between the 50 and 200 day moving average here. And whichever way it comes out will be the next 80 cents or so, or a dollar. So we get through 27. I don't think we're going to 1,000 right away, but we could certainly take out 30.
Coach, good morning.
Good morning, still.
Hey, I think the level is 30, really. Anything below that is, I mean, I'm talking about the big picture. So anything below that is just a battle for short-term
Yeah.
Victory, but really 30, and it's not going to 1,000. I mean, come on, let's not kid ourselves. But above 30, then the skies are clear. My
Yeah,
opinion.
they're going to try and pull a bunker hunt. So, you were around back then, weren't you still? No, I don't know. Late 70s? What were you doing?
I
What were you
was
doing?
I was like 9 years old or whatever.
You were trading small back then? All right. All right. So go ahead, bro. You could take over here.
Sure. Okay, let me take over the screen. We have got Andre with us a bit later on the webinar, so
Okay.
that's good.
Someone
So-
said that we have the wrong picture up for Lydia.
Yes, yes, they're right. Sorry, we are human. We make mistakes.
Yeah.
Apologies,
Did you put
Lydia.
up me?
I can't remember. There was a mix-up. So sorry,
right,
Lydia.
She's not
So
here.
yeah, so we're talking. So you're talking about silver. Look at this. This is the weekly
nice
chart,
picture.
and this is basically where you want to break if you're long, which I am. And but for now, this is not going to break anytime soon, I don't think. But for now, this is what we're looking at, and we have US CPI today, which is going to be important either way, and market's expecting 4.9% year on year. I said yesterday, I think the risk is that at some point the markets realize that this is not transitory and that it stops believing the Fed story. And what happens then? That's the question. So now look, we're in this range here, which is pretty pivotal. And either way, I think today's number might be the stimulus to push it higher or lower. But I still think even if we do get, in DXY near 94, 94 and a half, I still think that's going to be a really good sell. But we could easily get there. So what do I do before this number? I don't like to trade to guess the number. I like to react to the number just like everybody. But I have a tiny bit of a short in treasuries. I said that yesterday. So very small, just to keep it interesting, because I think that at some point, like I said before, I think the market is going to realize that this is not transitory. And I think treasuries are going to be the ones that explode higher. And if you look at yields, 150 was the breakout point before, somewhere around here. And once we get past that, which I think we will, then I think we're going to be gunning towards 2% very quickly. So that's the way I'm playing it. But really, as I said before, it's very small. I don't want to. There's no point gambling, on a number. So I'm not doing that. I'm just. I think it's a great risk reward trade. So the dollar we talked about. So this is this is what I think the dollar is. It's a decision day for the dollar. Equities. What can we say about equities? It's just a one-way train. Will I get in front of it? Of course not. Especially not with yields where they are now. Definitely not. So this I am not touching. I have some equity exposure via miners, and I have people who are on the chat room and who are subscribers will know I have also this baby, which has been doing really, really well last few days. I've been long this for about 2 months now. This is a rare earth metals ETF, and it just took out these highs before, and I think it's just gonna keep going. So I'm sticking with that, and I have been discussing this on the chat room for a while now. So I do have some exposure in equities, but it's all miner related and commodities related. So we do have CPI, like we said earlier today, and it's going to be important either way. We also have the RBNZ tomorrow, which is going to be interesting because they turned hawkish, and I think we're pricing a hike within the next few months, maybe I think by the end of the year. So that's kind of similar to Norway. So you see commodity currencies and their central banks getting a little bit ahead of the curve, trying to tighten because they can. They're not. Norway, they're not running a deficit; they're running a surplus, and the RBNZ and Australia, New Zealand, they're a little bit better fiscally, so they can actually afford to try their luck at tightening. Will this be on time? Are they ahead or behind the curve? I think every central bank is behind the curve, but at least these guys are trying. What else did we have? We had some data today, but really nothing of great importance. German CPI came in 2.3% year on year as expected. So that's above target.
Any reason why cable is weak today still? That you could come up with?
Just the dollar is a little bit firmer ahead of the numbers.
Okay.
I mean, the euro is lower, euro dollar is lower, cable is lower. The dollar is just inching higher ahead of the numbers, but I don't see anything else.
I see you have Dogecoin up there on your screen.
I have that because it's I'm interested to see these daily moves, which are ridiculous. But I think at some point I'm gonna take it out.
Come on, be honest. Be honest.
I haven't traded it.
You're a big Dogecoin whale.
Yeah, I am.
Right.
But no, look at this. I mean, again, we've been talking about this every day. Bitcoin is lingering so close to this support, and if or when it breaks, I think we're going 26,000 first stop, and then we see from there.
Why do you say 26? Curious.
Because that's Michael Saylor's. It's Michael Saylor's average at the MicroStrategy.
Oh, okay, interesting.
And whenever the market knows who the big whale is with a position, they will always try to squeeze that. Squeeze the maximum payment.
Ask the Hunt brothers.
Yes, there you go.
They had to file bankruptcy.
Yes. So otherwise, it's been a slow session in FX today. Like the Krona is one I'm looking at. I really want to short it again, but not. I mean, go long Krona, so short these pairs. Not yet. Dollar Norway anywhere around 9. I'm gonna start. And Euro Norway again anywhere near around 10.5.
You know, Stelios, the fun part is that we've been running, we've now completed, having to do with data, with what we get in 18 minutes. We've now completed the first half of the year. We've had inflation, reported inflation, north of 5%, more or less, for half the year. But the annual revised CPI target for the Fed remains at 3%.
So they expect what for the rest of the year? 1% for the rest of the year.
I'm assuming they expect something like inflation is going to go from 5% on average during the first half of the year to like 1%. So they're on target.
Yeah. Otherwise,
guess if they're going to be right.
No, they're going to have to revise it again, of course.
Yeah.
Well, yeah. What can I say? Yeah, so that's pretty much what I had to say. I know we have Andre who's going to talk for 5 or 10 minutes. So I don't know if you have something to add, Steve, before he comes on.
Listen, yesterday was one of the most boring days I've ever had to do analysis at, because literally from everything we covered, like 90% had a pin bar at the end of the day. Literally. Yeah. So nothing happened. But hopefully, inflation data in 17 minutes from now are going to change that.
Yes. Well, let's hope so.
So yeah, I'm crossing my fingers and waiting.
Cool. Okay, let's maybe we can bring on Andre.
Let's give 10 minutes to Andre, and then we take over. We take over Stelio 2 minutes before the bottom of the hour, so we can cover the data and the movement post that. Hey, Andre.
Hey, Andre.
Hello, everyone. Can you hear me?
Yes.
Hey, nice. Okay. Good to hear your voice, Andre.
Nice to hear you too, Dale. It's lost from. I can't remember the last time I was here.
I can't remember.
You were too drunk.
A week ago. Huh?
He was too drunk. That's why he can't remember.
Probably me.
I know we were.
Especially me, that I don't drink. I don't know that.
We were younger, though. I know that, Andre.
Yeah. So right, can I pick the screen, Dale?
Grab it.
Yep.
Okay. Screen.
You can even pick your nose as long as you don't do it in front of the camera.
Screen 2, I believe this is the one.
Oh, we can see it. Okay, great.
Okay, this is WGI, but this is not the one that I want to share for now. You were talking about the Dixie. Let me change this into the weekly. I shared this one with our subscribers at Forex Analytics. I see this as a potential technical double bottom for the Dixie. And if we pay attention to the MACD, I think we are in a good position to see more upside momentum, not for the bearish side at this point still is. And the reason why I'm saying this is because every time the market, and as you can see, every time the MACD starts to, this is a weekly time frame, by the way, so this may take some time to develop, but I think we are in a great position for a small period of upside momentum for the Dixie, at least to the 38% Fibonacci retracement, eventually searching for that 200 moving average. We have also what we may call, and what usually I search for as a technical double bottom here. And we have what we can say a perfect V shape. We have the second bottom retesting the first one, or the closes of the first one. Of course, we need to see the violation of the resistance for that pattern to trigger. But some of you are already aware where we are positioned. We are facing the golden Fibonacci extension. We are also, and this one I shared a long time ago, the 78.6% Fibonacci retracement level. So I will not be surprised to see not a huge movement from here, but at least to try to vanish with the previous structure highs, trying to trigger that potential technical double top or double bottom, kind of triggering that pattern to the 38% Fibonacci retracement, and then the price should start to fall. And this is pure speculation, of course, but we are in, let's say, we are in a good position to say that the market may find some pressure and some support at these levels. But of course, if the market will starts to fade from, or starts to fall from this price zone, as Stellis was mentioning, of course that may change my perspective. But at least until the market respects this structure and this price, the close prices of the double bottom, I will remain if I need a bias, I will remain my bullish bias from this price on it. I will not be surprised to see that happening. But that's, as I said, we need to see that resistance being vanished at first, or being violated first, to trigger that double bottom. So that's my technical view for the Dixie. I hope that makes sense. Let me also go into the crude oil on higher time frame charts. So based on the Fibonacci levels and the criteria that we have, and because the market has found some pressure at the golden Fibonacci, not the golden Fib, actually the 113% Fibonacci extension level from this first swing low, on a long term, actually in a very long term projection, I will not be surprised to see crude oil trading above 100. But it's a step-by-step process. First of all, we need to trade above the previous structure highs, and I'm pointing to 99.30, the golden Fibonacci retracement also from the previous structure highs. So very close to that price zone. So in a very long-term projection, I will say that I will not be surprised to see that happening in a step-by-step process. I don't know if the market will print a 10% retracement before that happens, but based on the criteria that we have, I will not be surprised to see that happening on a lower time frame. And Dale, you can interrupt me whenever you want, because I know you are at least for a short term with a bearish bias. I'm not sure if that's correct or not, but you can always correct me. But I think you have a bias for crude oil for a potential fall from
well, I
this
mean, it's
price
just
on.
the first time that it's not making new highs with
Yeah.
risk in weeks since a meeting last week, and could just be retraced. And we have, you know, maybe a C wave down there? Took it
Well,
one more,
a three-wave structure, at least a
Yeah.
three-wave structure as well. I can identify those three waves already. We can identify that
Oh, yeah, I
sequence.
see that, yeah.
Well, Grega is the one who can assure us that but it's clear for everyone. We have those three waves here. I'm not sure if that will be enough to see more upside momentum, at least in terms of technicals. What I see, or what I was seeing at least during the previous weeks, crude oil trading inside this kind of an ascending channel, respecting not only that midpoint or that mid channel, the mid level of the channel, but also the highs and the lows, or the bottom and the highs of the channel. And once that happens, the market has retested that channel and starts to pull back to the 200 moving average, now well supported by that moving average. We are also facing the golden Fibonacci retracement level, and that's the reason why the market has felt some pressure before making some decisions. And this is something that I was expecting. I shared this one on Twitter, I believe, expecting some type of a right shoulder, eventual right shoulder. Eventually it's formed already, but we still need to see a clear violation of the resistance at 75 for that pattern to trigger. I will not say that will offer a rally because usually I trade based on the default projections for those trades or those patterns, but I will project that inverted edge and shoulders to new higher highs back to 78.61. So, and as I said, it's a step-by-step process. Then we will try to identify the next pressure levels.
You know what you lose, Andre, when you only look at the front month or a CFD, and you're not looking at the whole structure like I used to before, modern technical trading, is that you would notice whether a market was in backwardation or a carrying charge market, and they both mean different things. And I didn't even know till I heard someone talking about crude's been in backwardation for a long time, which means demand in the front month and the back months are a lot lower. And that's the bull market, backwardation.
Yeah.
So
we're still trading that.
Yeah. I used to be aware of things like that, but now that I just look at front month and I don't pull up all the back.
But let me ask you something, Dale. How that will help you?
Because you wouldn't short a market in backwardation.
Why not? I can short a market.
Because well, you can do it, but
I'm sorry
it's saying that demand is the demand is so strong. There's usually carrying charges.
Usually you will put less money at risk if you go counter trends. That's correct. I believe that's what you are saying. And sometimes it makes no sense to push a trade against a well-established bullish trend in this case, or any other. But
it's just a rule, it's easier
it is. But if you trade harmonic patterns,
it doesn't matter. Backwardation doesn't matter.
No, I'm not saying it doesn't matter, because usually I try to manage the position size of my trades based on that. If I trade in the direction of a major trend, I feel more comfortable. If I want to short the markets against a trend, I can minimize my losses, trying to adjust my position size. But of course, if you trade based on a specific pattern, the only thing that I can control is the risk that I assume for that specific pattern. And if I trade in the short term, usually I don't pay attention if I'm trading against or in the direction of a major trend, because those patterns usually will react accordingly to the default expectations that we have. What I'm saying is, if I push a trade, let me give you the most recent example that we shared for crude oil. This bullish shark pattern at 224% Fibonacci extension. This pattern will not offer me, so I will not enter this pattern to trade this magnitude of a sequence. You know, I don't enter this trade to target the 200% Fibonacci extension above. I don't know what will happen next, but I don't trade based on those expectations. This is a false expectation that I can try to manage my trade and hold my trade in that direction because it's the direction of the trends. But usually I trade based on a specific target zone. So basically the shark pattern trades the 50% Fibonacci retracement level. So that is my default target. That is my projection, and I support my risk based on that default projection. So this is my reward. I never entered the market to lose more than what I want to win in this specific trade. So this is my reward. My maximum risk will be always the maximum of a 1-to-1 risk reward maximum. So I can try to minimize my losses, of course, but I can try to take advantage of a situation, a bearish pattern against the trend, but I need to know what to do at the default target zone. You know, I can try to do that and try to minimize my losses based on those harmonic patterns. And that's the reason why I like those patterns, because they tend to offer me a very friendly risk reward situation to trade. So basically, I'm seeing these potential inverted edge and shoulders for crude oil, and that pattern will point to 78.61 to new highs for crude oil. Now, let me also share with you the eventual edge and shoulders, of course, for the Canadian dollar, and that points to 122.78, so below the most recent fractal support level. For now, we're still trading above this previous structure resistance, and let's see if the market will hold above this support level 124.42 or not. A violation of this support, I believe it may trigger that sequence, and the market may find support at the previous fractal support 122.78 for the Canadian. So one thing will guide us to another, because if crude oil starts to trade higher, eventually the Canadian will react also. The same may happen with the Norwegian krone, and I don't know if you have an interview now, Dale, just alert me, please. But for the Norwegian krone, we're still trading above this structure house, so we have supported 865.91. I projected this bearish sharp pattern at the golden Fibonacci extension, converging with the 200% Fibonacci extension level, which is a default target for this kind of a cup and handle. So if the market finds support at this price zone without breaking the fractal, eventually we will see the Norwegian krone also being pushed to new highs. Of course, if that happens, I believe all the dollar-related pairs will feel the same, or will show the same kind of a reaction. CHF, two pressure levels, one of them projected before at 91.25, the 113% Fibonacci extension level. And if the market fails to find support at this price zone, I believe the market may fall into 96. I forgot to put my retracement levels. Actually, it's here already, the golden Fibonacci retracement level, the convergence between those multiple golden Fibonacci levels, completing also the bullish scrap pattern, 90.60. This is the price where I want to see the CHF trading, because I have also my longs for euro versus dollar after completing this bullish cipher pattern at 78.6. What we can see here, and it's under formation, but I can see this kind of an inverted edge and shoulders for euro versus dollar. That pattern, in my opinion, can trade. We have my default projections for that.
We have
one.
data, Andre.
We have the
Yes.
data in 20 seconds.
In
So
20 seconds,
Okay,
yeah.
pick the screen. Take the screens if you need, Steve.
I am going to do
okay.
it now.
Okay.
Thank you, Andre. That was
Thank
really
you too.
good. That was
Thank
really
you,
great.
Andre.
Thank you.
Okay,
Thank
so
you, Andre.
Good stuff, man.
Thank you very
let's
much.
see.
Let's see if that works.
And
TikTok.
0.9. Oh, this is big.
Oh,
Damn, I should have.
yeah,
I should have
3%
sold.
year-on-year target, Stelio.
Should
I
have
should, I
sold
should, I
more
should.
treasuries. Yeah.
And what did I tell you yesterday? Initial reaction, stronger dollar. Completely perverse and illogical. But I told you that you should expect this because the markets are still in their own world, really believing that the Fed is.
Take partial profits on the Nasdaq short if you took it.
I think the
It was
market's
just a
now.
scalp. Yeah.
I think the market's now realizing that this is not going to be transitory. I mean, unless you define transitory by 2 or 3 years, you know. So.
It's transitioning to hyperinflation, Stelio, so it's definitely
Oh, that's
transitory
good,
from what they
Steve. Yeah. Everything's always in a transition, isn't it?
Wow.
Huh? I'm in a
so
transition.
Interestingly, metals are not doing anything yet. Usually,
Yes.
on these kinds of numbers, they tend to dump.
Oh,
Yeah,
of course
there
they
you
should, because why wouldn't you sell the best inflation hedge when inflation is really skyrocketing, right?
Because it's not through its transition.
Yes,
You
yes,
have to wait
absolutely.
for the transition, buddy.
Okay.
Absolutely.
Cool.
Anyway,
So,
we have a
dollars-
Go ahead.
Dollar strengthening. Yeah, due to the data, give us a couple of minutes. I understand, Dale. And
yeah,
we'll
sorry.
give your guest, of course, extra time. There's no question about it.
Oh, okay. Lydia, hang in there.
Hey, Lydia. So euro at the lows of the day and pushing. Stelios mentioned the metals. Let's have a look at what gold is doing. So gold really doing nothing at the moment, but as Stelios said, perversely, but I wouldn't be surprised if this opens the door for another leg lower before the market realizes that this is completely stupid and this is the first thing you should be buying in this case. So yeah, I wouldn't be surprised if gold and silver dump lower from here. But as I told you before, we said since yesterday, the initial reaction to stronger inflation data is probably going to be higher dollar, which is completely illogical, right?
They're hardly putting anything into the 10-year.
Yeah, the reason I'm saying it's completely illogical, I wouldn't be bothering so much about it, is because keep in mind that abruptly, at some point, the market might extremely fast shift gears from, this should be hawkish going forward to, oh my God, these guys are really behind the curve and, they don't seem to really want to get ahead of it. So dump the dollar, buy the metal, so on and so forth. So don't be surprised if the continuous almost inaction from the central banks to do something about inflation one day suddenly becomes a worry for the markets, and the markets start looking at high inflation data in completely the opposite, and this time, parenthesis, the correct way, and start selling whatever depreciates via inflation and buying whatever preserves your purchasing power, right? So keep that in mind.
Yes. Excellent. And Lydia, I'm sorry about the photo. We mixed up the sites. It's not going to happen again.
Whose photo did you put up there?
I don't know. There was some glitch. It was a random one. I don't know.
Oh, okay.
Anyway,
because Lydia's beautiful. Lydia's beautiful.
Of course.
All right.
Nobody said otherwise. Hey, Lydia.
Okay. Hi, Lydia.
Okay, Dale. Clearly, obviously, in 42 minutes from now, we're going to be covering everything in the morning edge. So, Forex Analytics members, where you'll get to the rest. Hey, Lydia.
There she is.
Nice to have you.
Hi, Lydia. Now there's a good picture. That you know what you gotta use that from now on because we'll get Lydia back in the regular rotation. Okay.
So, Lydia, transitory inflation.
Oh, I'm so happy to hear you guys say that because I don't think so either.
Yeah.
There's fundamental reasons why it very well could not be transitory. And
for people that haven't noticed, by the way, and I don't know, Lydia, if you actually saw that very recently, just a few days ago, even the IMF came out and in a very discreet way said that there are some worries that with the current fiscal policy in the US, inflation might be more sticky. They were, of course, very gentle and polite in putting it in words, but I was kind of surprised positively in this case, because it was a how do you call it in English? It was a kernel of truth.
Right.
Yeah.
Thanks for
Exactly.
being here, Lydia. It was a
Of
great
course. Thanks
interview.
for having me.
Hey, listen, Lydia, do you want to share your screen?
Sure.
Okay, because before we get to the markets, I just want to talk to you about what you've been doing. And I know I've reached out to you a few times and you're traveling to Africa.
Yes.
And I'm wondering, you have a new mission in life, combining, something that's in your heart with maybe some financial deals. And what's going on in Africa for you? What are you working on down there?
So I have been getting involved a lot in private markets, a lot of activity for for the past decade, but I've been involved
Yeah,
in really more heavily in the last, I would say 4 years, 4 years.
yeah,
Yeah, so doing a lot more venture capital. And so
cool.
it's interesting what's going on in private markets in the context of monetary policy and foreign exchange. Because a venture capital, I would say Forex is important. So right
Yeah,
now we're seeing investors right now source dollars. Dollars are hard to find, which means
okay.
why wouldn't the price of the dollar, increase or rise? So looking at the pound top out at $1.42 several weeks ago now. Um,
Are they
but
embracing crypto down there too, Lydia?
yes,
For the
completely. Yes.
debanked, I think that was one of the purposes of crypto was for the people that didn't have bank accounts.
Yeah,
The
it's really
de-
unbanked, but if we even it's even for trade, mostly for trade, just being able to find the dollars to pay for imports.
okay,
So without having dollars or access to dollars, or I say access to dollars being more constrained, using crypto, using Bitcoin to pay for your
yeah,
input so that you can do trade. And then different startups coming out with wallets that allows you then to now also accept Bitcoin for payments for your goods. So yeah, it's more, yeah, a lot of people talk about the unbanked, but it's really to facilitate just trade, just regular trade, on the continent, even beyond e-commerce, just trade as we know it.
why are
Um,
dollars so scarce down there?
ha, I well, that has a lot to do with monetary policy, to be quite honest with you.
They don't want the dollar there to be competition for their local currency. Is that it?
Um, I don't, maybe it could be
Yeah,
that there, you know what? Yes, because as you say that, I'm thinking, yeah, most people want their currencies to be stronger.
yeah,
But a lot, and they've been succumbing to market forces and having to devalue local currencies against the dollar,
okay,
which makes dollars more in demand. So it's a kind
yeah,
of a vicious cycle, right? So it has a
yeah,
lot to do with monetary policy, really trying to strengthen local currencies, but you're defying
okay,
what the market needs, which is, if you're doing global commerce still right now, especially through Africa, folks want dollars or euros or pounds, not necessarily, even when you're doing cross-border payments between, let's say, Ghana and Nigeria, there's a preference for dollars over
okay.
CDs or Naira. So
How
just
about
a lot of
wands?
trade happening.
China's pretty active there, aren't they? The
China is
Chinese?
acting in terms of infrastructure projects.
Okay,
Yes. But
yeah,
I do a lot more tech stuff than
yeah,
infrastructure and real estate. So we see a lot more dollars, even with different investors coming in, whether they're European. I just spoke to some Japanese investors. I've spoken to Saudi investors in the
yeah,
past couple of weeks. And so when you're looking at tech and venture capital, it's all dollars. It's still dollars.
okay.
It's still dominated by dollars. So that's
Well,
been interesting.
I can tell you one thing. It's great to hear your voice again.
Thank you so
And
much for having me.
I've
That
been
has been so
trying.
interesting. I've been trying to
You know, I've been,
These are
Lydia, are
really
you available? Lydia, are you
so
available?
fine.
Finally, yeah.
I-
All right, so, you know, we've had, a little stabilization in the dollar and, you know, I'm ready to, see what you're thinking here in cable. Are you, in the camp that there's, still at least a counter trend bear market rally in the dollar that has legs? And are you more, biased to sell rallies in cable, or are you looking for breaks to take longer term long positions?
the the pound dollar is still bullish, and so it's been consolidating, and I think it can consolidate lower, but we're sitting here at this support level
Yeah,
that's been buoying price. I mean, it's a
right.
very it's a quite medium term support here with these lows here. So we're
Mhm.
seeing all this bouncing. Like I was surprised actually to see us here below $1.40. Um, but I wasn't surprised to see us lower than that. So I just think we're consolidating. You know how the cable acts, it's July. You know how cable acts this time of year anyway. If you're into seasonality and watching it seasonally, we tend to consolidate a bit and see more of a break in come Labor Day weekend. We'll see more of a break. So I just think we're doing a
Okay,
lot of
so summer
consolidation
doldrums
at this
for
point.
cable and
Yes.
okay.
Yeah.
So then you have to look to the crosses to find some action, right?
Yes. You know my favorite. It's the Euro
I
pound.
do. And you know, I've been trading, it's been doing nothing. You don't know how many times I've changed my mind in the last, you know, 4 or 5 4 or 5 months.
Everything
Although
is
I've been trying to
consolidating.
buy it for a while, you know.
Yes, I've been alongside you in that trade then. It's
Yeah,
been yeah, and we can see like the that it's bottoming. I mean, to me, this is a bottoming, and if we don't break below these lows, below 0.8472 here, if we
yeah,
just don't break below 0.85 in general, just generally speaking, I just think we're accumulating, and I just think again, it's a lot of consolidating. I mean, pound has been strong. Pound has been
right.
strong for a long time. I would say probably most of 2020, right? So there's a lot of long-term consolidation, and a lot of these moves, if just looking longer term, have been Fibonacci extension levels. So long term, like big, like this is the 261.8 level
Okay.
here on the euro pound. Even the pound yen has also hit the same kind of really big Fibonacci extension levels. So there's going to be natural consolidation, especially after these much longer term. These have been really big moves on the big charts. So to me,
Yeah.
I think that yeah, if you're not really shorting, you guys know I'm not short term, more of a swing trader. So to me, this has been the perfect time to be focused in other markets because it's natural seasonality where plus we're coming off these big moves. So to me, it's like it's been
Good time for a vacation.
taking and accumulation, and what most traders are doing, what most people at the big desks are doing, especially now that we're outside is open. Yes, I
Okay.
would enforce moves right now. Ooh, especially
Okay.
July. I
All
remember
right. You know,
I used to open stuff big
Stelios,
in July.
uh, Stelios is looking for your target if you put those fib extensions out, and I'm wondering if you could see that too. That's the next support area, the
Yeah, well, this is
3.618. If we break
yeah.
that 82,
See, I don't think this is the next. I mean, this we can get. It could go. I don't think we're going here, guys. If we don't get,
okay,
but so I don't like to forecast like I like to see where we can go. But what we're doing right now is finding this support, and this is
yeah,
the kind of huge play. Is like yeah, I could go to
right,
82, but I really, I don't see us breaking below that. And that would be this large, huge 618 level,
yeah,
which can now catalyze. Could be as like a catalyst for pound weakness. So then what becomes the impetus for pound weakness? Because all of this is just it's crazy strength. I mean, it's
okay,
when I was looking at this, I told you. Oh no, sorry, I'm going backwards. Go back. I was trying to take some of these fib extensions off to kind of bring us into a more shorter term view because longer term is like we've
yeah,
hit all the targets, all any of our your very long view, we've hit targets. So I can't be I be a proponent of you trading these on the much shorter term and just taking pips out of the market. But
Okay.
anything on the setup for a swing trader like myself is just we're I feel like we're just all consolidating all over the place.
All right. How about back to 148 on that though, Lydia, for a long-term buy back against a breakout? If that happens, would you be interested?
Yes.
Okay.
Yes.
All right.
I
Thank
think
you.
you can even come in between 148 and 146. This is 146, 910, but 147. Have you guys remembered all this price action around 148, 147? So to be
Yeah.
above that, yes. And I could see a lot of faking out around 148,
Yeah.
to the downside, and then but finding support. So just remember, there's a zone here at 148. So just be careful of where you're buying. But yeah, I mean, I see pound yen. I mean, unless equities turn, right? If we see major risk aversion enter the market, um, I would imagine that our consolidation takes us into these long-term now support levels that have been
Okay.
resistant for years.
Yeah,
For those of us
years.
in trading, yeah, this is a year-long support, former resistance level. I suspect the pound yen stays above here for as long as we have this very, very uh, risk appetite supported by this monetary policy.
Yeah,
I'd
that's a
imagine.
2400 pip formation. So if the breakout holds there at 48, it measures 172.
I think the breakout holds. I think the
Okay,
breakout.
that's a big formation. It's huge.
Yeah. Yeah.
You could call it ascending triangle, head and shoulders, whatever. That breakout's huge. Okay. All
Yeah.
right.
But
So
we
what
think
about the
it's up there.
commodity currencies here?
All right. So looking at the pound kiwi, it's the same deal, but nothing. The pound kiwi was interesting to me because it was one of the few that didn't have the I'm not in the long term, but I'm on the 1 point. It didn't have. It was one of the ones that didn't have this crazy breakout. So we're and I think that has a lot to do with the relative strength we've seen in commodities. But pound was really strong, actually.
Yeah.
This was the
Yeah.
pound kiwi, and it's struggling even still to break out, even where we're
Yeah.
seeing the pound break out amongst other ones. So I think this was probably probably more of a tough trade though, because if you saw the strength in commodities, you were trying to sell this, but pound strength, and fundamentally, pound strength didn't make sense to me.
Okay.
Not
right.
fundamentally. So you really had to go with the charts if you're
And
trading.
and why is that? Is it a post-Brexit hangover or what?
That's it had a special bout with COVID that took
Okay.
its economy,
Yeah.
closed its economy for the longest out of most of major economies. And
Yeah.
so, you would have thought that we would see a lot more pound strength, but that just wasn't the case at all.
Okay.
I
All
mean, I'm
right.
sorry, a lot more pound weakness, but
Yeah.
that wasn't the case at all. Yeah.
Okay.
Yeah. So I haven't really done the commodity dollars at all, Dale, to be honest with you. I've just stuck to
Okay.
these major three.
Okay.
Yeah.
That's enough.
Mhm.
I'll tell you, Lydia, I knew people that stayed in one trading pit their whole career that had
Yeah. We
chauffeurs.
talked about this.
It only takes one. I mean, I know you teach and educate, and better to, know one instrument like the back of your hand instead of
Yeah.
being unfocused on 10,
Yep.
right?
Yes. Yes. And when you
Okay.
have these times for me, market where, I'm focused in
You've
other
narrowed your
asset
focus
classes,
because
I
you're
narrow my
busy.
focus. Yeah.
You don't, it sounds like you don't have as much time with all the things you're doing to like day trade and sit around and scalp anymore. That you're
Correct.
swing trading now.
I'm more string trading, you know that. So
Yeah. Yeah.
I've never been much of a scalper.
Okay. All right. So, why don't you take us to your website and so people know how to get a hold of you and they've heard your voice again and maybe they'd be interested. Maybe you have some new products since I've last talked to you that
Yeah.
they could get involved with.
Thanks so much. I always like to show the blog because there's various ways to connect with me here. Whether you're interested in just basic trading, I know this community is more advanced traders, but we do a lot of different analysis. Been doing a lot more stocks for clients lately, and so I've been posting that work. And have a
Okay.
few folks under me now too that are contributing to the blog. So we do a lot of clients, but you can learn about the firm with this link, invest with us. I just have one course. This is really for those who are coming new into trading. And I just use Forex markets naturally to teach just the basic technical analysis, very, very basic. We teach 5 indicators. Talk
Okay.
about focus. We just focus in on 5 indicators. So if you're really new to trading, you can check out the course that I have here. And just, analysis. You guys are just interested in what reviews. The same way that I look at Forex is the way I look at stocks, is I look at commodities, the way I look at futures, and that's what I teach is, we use the same analysis that works
Yeah,
for you.
a chart is a chart is a chart, right?
Price action is price action. Exactly.
Yeah,
Crypto.
the-
Yes,
The only
exactly.
difference is leverage and beta, the title. That's really, I mean, you trade your pivots and fibs and everything the same way on Google as you do on cable,
Exactly.
right? Yeah,
Yep, that's how I trade it. That's how I trade it. That's
okay.
how I approach the market.
So that's the difference I noticed, a lot more coverage in equities for you on your blog.
Yes, because of clients. We're getting a lot more client requests too about, like for example, well, how can I play quantum computing? Because we have some engineers and they see what's going
Right.
on in Bitcoin, and then they want to get ahead of a trend. So what do we look like? What is quantum computing trend, and who are the players in that market? So we do a lot of that request work now, and we post a little bit of it. Obviously we can't post everything. So that's another big change is figuring out what I keep with clients and what I make public. So there's a lot, then there's, if you've seen
Right.
change in my Twitter feed, that's been a huge reason. That's been a huge reason since starting the RIA. I still have
Okay.
a lot of fun with all the markets. And this has been a great time to be focused in something else because, seasonally, I know the pound is going to go through doldrums, and given the big moves last year where pound was really moving nicely. I can, allow it to accumulate and get set up for moves. But yeah, Dale, you called out my trade because that pound yen is what I'm waiting for to drop into 148
Okay.
and to
I'm
see how it
sorry.
moves. Oh no, it's okay, of course.
Great minds.
Exactly.
Cedric is asking if you have any written trading guides that you offer. Anything written?
I
Where?
don't. I think the closest thing
Okay.
would be just the stuff that I do on the blog.
Okay. All right. Well, Lydia, thank you so much for coming in today and stepping up for me. And I'll be in touch with you after they process the interview. And I'm always rooting for you.
Thank you,
Whether
Dale.
we're
Thanks.
speaking or not, I'm a fan.
Thank you so much. I really appreciate your support. Thank you
Okay.
for having me, truly so much.
All right, everyone. Lydia Idem Finkley, and you could find her on Twitter at Faith Might. And that's also the name of your blog, right?
Yes.
faithmight.com.
Yep. Faith Might FX.
Okay. Okay.
Faith Might. Yep.
And I don't even have to tell you to keep the faith. I know you. So
Yep.
thank you so much, Lydia. Really a pleasure
Dale.
speaking with you again.
I appreciate it.
All right.
Love
So everyone, that's a wrap for Turnaround Tuesday. Made a couple decent calls, could have scalped the indexes, but it really wasn't my style. I didn't even know there was big news coming out. That's how aware I am. And just don't count your pips. If you made some today, count your blessings, and we'll see everyone tomorrow. Good hunting and adios. Thanks again, Lydia.
Thank you, Dale.